Hello, I'm David Penn, Research Analyst with Finovate. Welcome to Accelerating the Speed to Platform Ready for Banks. In 2020, banks will spend about $2.3 billion on core modernization just to satisfy customers and try keeping fintechs at bay. We'll be discussing what the future of cloud-first and platform-as-a-service strategies look like for firms trying to meet transformation goals without breaking the bank. Our panelists for today are Paddy Ramanthan, Founder and Managing Director of iValley Innovation Center, Misha Goussev, Principal Partner Solutions Architect for Amazon Web Services, and Tom Demchak, Global Banking Technologist for DXC Technology. Paddy, to start us off, you wanted to touch on operating models for neobanks and a recent study that iValley conducted on the banking industry.
Thank you, David. Good morning, everyone, or good afternoon, depending on where you are. It's great to be with my fellow panelists here, Misha from AWS and Tom from DXC. So as David mentioned, we were studying what is going to be the differentiator in financial services going forward, especially for small to mid-sized institutions. And we kind of took a step back. There's obviously a lot going on. There's fintech, there's a lot of technologies like artificial intelligence, machine learning, and blockchain. So how do you kind of make sense of it? What does a bank need to do kind of going forward to stay competitive? And the competitive landscape is changing too. It's not just pure banks, there's fintech, there are internet firms like Google, Amazon, the e-commerce side of Amazon, and Apple kind of getting into financial services. So if you kind of step back and look into history, right? What was what was the competitive differentiation for banks back in the 70s and 80s? Largely distribution, right? The more branches you had, the more footprint you had. And kind of fast forward to the 90s, the advent of core banking. So you saw a lot of investments going into those systems of automation, systems of record, as we know, like to call legacy today. With the advent of the internet, kind of late mid-90s, if you will, a lot of online. So you saw a lot of investments in online banking kind of transformed into more digital as things progressed. Then there was the data and the intelligence component. So the banks are sitting on a lot of data about their customers. How do you kind of use that to serve the customers better? So what we like to call systems of intelligence, which is basically big data, artificial intelligence, and things like that. So there was a lot of investment in that, if you think about it, over the last 20 or so years. And then the fintech movement started, right? Like we looked at when did fintech actually start. So PayPal, which can be attributed as the first fintech, and there's a little thing on the top of that slide there, which kind of shows kind of progression of fintech. PayPal was founded around 2000, I think 1998 or 2000, but the large fintech movement kind of started after the recession period, the financial crisis period around 2008, and it's been continuing, right? We have 40 plus unicorns. There has been more than $150 billion dollars in venture capital investments. So banks, obviously, around 2010 and so realized fintechs are an integral part. They were transforming the journey. They were removing friction from how financial services were working. So we saw a lot of partnerships with fintechs. Then blockchain distributed ledger came kind of from left field with Bitcoin and stuff, but the whole permission ledgers and how assets could get into kind of in a digital form, so to speak, in the distributed ledger. So that can have profound implications in how financial services operate in capital markets and securitization, and everything. We're probably seeing only the tip of the iceberg in that, but that was also kind of transformational and disruptive in many ways. And then we had the open banking. Europe had PSD2. Banks were kind of enabling this outside-in access and opening themselves up. So what do we see going forward into 2020 and beyond? We kind of see a convergence of all these forces and what we like to call kind of this neobank platforms. And what are neobank platforms? So they are platforms that enable you all that we talked about, like the digital customer journey, the fintech type customer journeys, or fintech integrations, the ability to launch or create and develop and launch a fintech type capability at the same time and cost as how you would do how the fintechs do. So enabling the banks to compete with fintechs. So it's end to end. So what open banking and others saw was kind of more of a patch on top of existing models, and what we kind of look at neobanks is kind of built from ground up. It's purposeful, and we have some examples and talk about that a little later as well. But Goldman Sachs launched, as you know, a consumer finance platform. Markets, kind of purposeful. It's been built from ground up. They were not in the consumer finance business. Solaris Bank, this is a bank for folks who don't know about them, out of Germany. My fellow panelists today are also Solarity Digital Banking from DXC with AWS is also a neobank platform that helps financial institutions, especially small to mid-sized institutions, kind of get parity in that, right, to build your own markets, if you will. So the logical question is, how are neobank platforms different from the open banking model? So if you look at the two diagrams on the left and the right, the open banking was a layer on top of existing systems, and it still did open up to developers and fintechs, and there are very interesting developments on it. But what a neobank fundamentally is kind of purposeful. It's end to end. It's flexible, and it enables kind of development of these new digital and fintech applications seamlessly. And some of the key characteristics on the right, it's built on modern technology. So we support for artificial intelligence, machine learning. It's built in the cloud, and that gives you the flexibility, and it kind of integrates with digital assets or blockchain distributed ledger intrinsically. It has broad product support, so from deposits to lending to payments to even wealth management, and it has digital identity and digital onboarding support, because a lot of things that are happening today is everything is digital, and so it's not just on the processing. One of the things the open banking capabilities did not change is kind of the value of openness in the middle office and the back office. So the neobank platforms kind of look at it end to end. So there's not only innovation and a lift in the front office and how the experience happens, but there is automation and efficiencies and value both in the middle office and the back office. So that's how kind of the neobank platform differs from what we saw in the open banking era. So we're seeing it happen. I mentioned briefly about Marcus. So if you look at that little quote from the Goldman Sachs CEO, they recently launched, I think last year, Apple Card, which was an integration. Now try to kind of contextualize that to your own environment in a traditional bank environment. If they had to build something like an Apple Card working with Apple or somebody else, how much of an endeavor that is. For Goldman, they could conceptualize it and build that in record time. And overall, the Marcus platform has done really well. They've raised about $55 billion in deposits over the 3 years they've been in existence, and done $5 billion in loans. And this was hot off the press on the right. You saw the big acquisition announcement by Visa of Plaid. So what is Plaid? Plaid is just a platform to access bank data, not one bank data, but across bank data. It's consent-driven, but that's what it is. And Visa is paying a huge premium to get into that business that essentially serves the fintech. And as I mentioned, blockchain, right? We're just seeing the tip of the iceberg. Solaris Bank, that was one of the examples I quoted earlier. They're looking at doing custody services for digital assets. So as a bank who's looking at either core transformation, digital transformation initiatives, migrating to a neobank is not like a one-step process or a big bang process. It's an evolution. So what are some of the criterions that you look at when looking to migrate into a neobank operating model? So or platform characteristics. So customer centricity, right? The things that already have the digital experiences, the fintech marketplaces or fintech partnerships that's built in. It does not only address the chief digital officer's need and CIO's need, but also the CMO's need of bringing in new customers integrated with CRM. It has diversified product support across deposits, lending, payments, and wealth, built on a modern tech stack, cloud, AI, ML, blockchain, and open architecture support, one of the things that our markets and others have the advantage of. And it's backed by a robust infrastructure that's highly available, scalable, and huge uptime. So we'll hear more about these from my fellow panelists. So at this time, I'd like to hand it over to Misha from AWS.
Thank you very much, Paddy. Misha, yes, Misha, if you would, you're from AWS. If you'd go ahead and pick it up from there. We know that Amazon has been a critical partner in helping banks innovate in the cloud. Maybe you could talk to us a little bit about that.
Yes, indeed. Thank you so much, Misha Goussev. It's a pleasure to be here and speak on behalf of the AWS. And yes, AWS has been a very strong partner with many financial institutions and the banks, and we continue to see a very strong growth in that space and be a critical player in that space as well. Let me start by saying that the cloud adoption in financial services is still accelerating and accelerating at a very high pace. In my presentation, I'll touch on some of the key trends we see in the industry. Then I'll touch on some specific trends within banking and payments, and followed by some of the work we do in AWS to enable our partners in financial services and banking partners in particular. So the banking industry is continuing. Customers have much higher expectations and demand more choices. There's new forms of risks are constantly emerging. Banks collecting unprecedented amount of data and looking for ways to harvest insights from that data. And of course, regulatory complexity is growing, and cloud creates additional dimension in this regulatory complexity and regulatory world. At the same time, multiple forces are converging to drive cloud adoption in the industry. And I'll just touch on a few of the forces which are relevant to today's discussion. First of all, data. Rising data volumes demand more cost-effective ways to process the data and run analytics workloads against the data to enable AI, ML workloads. And cloud is really well positioned to address that particular need. Regulations. Regulatory oversight is ever expanding, and reporting obligations becomes more onerous and more demanding and more time sensitive. And of course, security and reliability. Many customers recognize that cloud provides, in fact, superior security and reliability compared to more traditional model, traditional data centers. So with that, I would also want to point out that the fintechs are playing an increasingly important role in disrupting the industry. And many of the fintechs are running on AWS or were born in AWS. But I think the important point here, and I'll quote the McKinsey & Company which essentially reflect their finding is that the banks aren't being disrupted by fintech, but they are being disrupted by customer expectations. So it's the customers, the consumers are driving the trend, and fintechs just responding to the needs and providing a service that the customers are expecting. So what trends do we see in the industries move to the cloud? And here I'll talk about the 6 trends we are observing. But first, what's happening is that as financial institutions become more comfortable operating in the cloud and comfortable with their understanding what it takes to meet regulatory and compliance requirements as they operate in the cloud, they then also become more open to experimenting with new ideas and leveraging the cloud to transform the existing businesses and bring innovative solutions to the market. So we see 6 trends ranging from widespread to gaining traction. Of course, customer experience and digital channels and cross-channel integration is evidenced everywhere. We all are users and customers of the new services which kind of pop up everywhere. Grid computing and high-performance computing is another massive major trend which allows customers to run compute-heavy workloads in the cloud at the fraction of the cost, using scalable capacity, using on-demand pricing models. Data lakes and data analytics, as I mentioned, is a big driver. And what happens here is that banks and financial services companies often have a lot of, obviously have a lot of data, pretty much data about every aspect of consumer life, but it's very difficult for them to bring this data together and harvest the data in a meaningful way using current infrastructure. So data lakes, properly designed, really provide opportunity which was not possible before to harvest the insights from the data. And then we are seeing migration of the core systems and transformation of the core systems and moving those core systems to the cloud, which is in a way the game changer, right? Because now as the core systems move, the cloud becomes the center of the operations. Machine learning and AI are no longer buzzwords. This is the reality. We see a lot of workloads. Pretty much, it's probably trend of the day, I would say. But it's still a young it's a really developing area. There's a lot going on here, so it's still a gaining traction, and we'll probably just see the beginning of that. Blockchain and distributed ledger technologies also are in the gaining traction category. We see some examples of that, but it's still much of the workloads in R&D and experimentation kind of phase. So let's talk about innovation in banking and payments in more specific terms. Again, customer expectations are driving the shift, and the customer expectations are pushing banks to build open APIs. And in fact, based on one of the recent surveys, we find that about 67% of financial customers say they would share more data with banks in return for new benefits. So open banking is an opportunity to create a better customer experience. And because open banking really started as a regulatory essential requirement, but many banks are embracing this because it does create opportunities for better customer experience, which manifests itself in multiple ways. First of all, allows for banks to create technology ecosystems, and many do. It allows them to integrate fintechs into the banking value chain in many different ways, and there are a lot of different business models which emerge as a result of this trend. There are now use cases for aggregation of customer data and transaction data at scale and real time or near to real time, and the new distributed channels become possible for banks to essentially sell their products and services to these new channels. Of course, cross-device delivery of information across portals and devices is now commonplace, and that's what open APIs allow us to do easily. And lastly, high level of personalization and targeted messaging is now possible the way it was never possible before. So this is just an example of a few banks which are running workloads on AWS, and there's many others. Some of them we cannot share, but many just there's no time to talk about. I think banks. I think the point here, the banks are realizing that the cloud environment allows them to experiment and develop new business test new business ideas, products in much more rapid fashion, and allows them to access advanced technology at the fingerprints anywhere on the planet within minutes if they wish to. So this is just an example of a challenger bank. Starling Bank has been very successful. They build their entire operation on AWS. In a mobile-only bank, which has been very successful, and one of the banks which adapted the Open API framework, built their own marketplace, and has an ecosystem of fintech partners. And this is another example of a more established bank. Actually, it's a major bank, National Australia Bank, using AWS to run their data analytics in the cloud. So Data Hub is 100% cloud-native data lake which they built, which contains PII data, personal identifiable information, and it's a game changer for them because it allows them to derive the insights from the data, which was never possible before. So I'll now just spend a minute to talk about how AWS helps FSI customers to innovate and what we provide in that space. Well, first of all, I'm a representative of Amazon AWS Partner Network, and we work with many partners, thousands of partners in our ecosystem. But broadly speaking, we have technology partners. There's a organization which build their own products on AWS, as well as system integrators and consultants, which allows you to help other organizations move to the cloud and be successful in that journey. Notably, DXC is one of the distinguished partners in this category. Just moving forward, one of the common concerns we hear from our customers is how to deal with the regulations, and especially across different jurisdictions and new regulations which affect the way you can or cannot operate in the cloud depending on certain local laws, etc. So we work with regulators very closely, and we largely pursue two goals in our engagement with the regulators. First, we aim to work with we help regulators understand the technical landscape, understand the public cloud landscape, help them understand how to properly audit the cloud-based operations, and essentially have a dialogue, facilitate dialogue between the regulators and in the industry, so regulations are properly understood and properly addressed. But on the same time, we also work with the partners and the customers and help them understand how these regulators, what they meant to achieve, and advise them on any changes and provide guides on what regulations means for them in different jurisdictions based on information available to us. So we also have AWS Marketplace. It's essentially a portal where third parties can sell their software and services, and we have a specific dimension in this portal specific to financial services. It's a very useful resource for customers in financial services space because it allows you to find hundreds and thousands of solutions really quickly based on different categories depending on the business need. And lastly, I would like to just mention about the new service we launched in November called Amazon Data Exchange. It is a marketplace for data. So it is really a marketplace where data providers, big and small, can make their data available to data subscribers in a way that's easy to procure, with transparent pricing, standardized APIs and standardized front ends, and all the logistical kind of overhead managed by AWS and make it really, really easy for customers to use data. And it's getting a lot of attention in the industry, and particularly in the financial service industry as well. So with this, I will pass my presentation to Tom.
Yeah, thank you, Misha. As you've heard from Misha and Paddy, a lot of banks are going through digital transformation, and DXC, which some of you might not know who we are, we're the combined company of Computer Science Corporation and HP Enterprise Services, one of the largest integrators in the world. We work with a lot of the banks around the world with their digital capabilities. In addition, we have core banking platforms ourselves. And a lot of these banks are in various stages of digital transformation. In particular, we're working with about 18 banks globally to help them with their various transformations. And we're also seeing a lot of down-tier, mid-size, and smaller-tier banks also looking at evolving into the digital arena, especially from a competitive positioning standpoint. And working with the banks, we see that banks have put their particular priorities in three major buckets. First is, what are the industry drivers? Second is the business priorities they're focused on. And third are, what are the technical priorities? From an industry driver perspective, some of the key components is, of course, what is the growth of the digital technologies, and how does it help enable the bank to grow your respective businesses? And also, as you heard from Paddy and to a certain extent from Misha, there's a continuous disruption from fintechs and non-banks. And to stay competitive, how do you mitigate that disruption and move to digital platforms so you can increase value to your customer base? From a business priority standpoint, some of the key focused areas is evolving the infrastructure that is used to really position it from a digital perspective so that it can be readily integrated with a lot of the fintechs that Misha was talking about. There's a lot of focus on growth. We're seeing a less focus these days on cost optimization only, but how do you cost optimize your environment and also grow your environment? And then, of course, the key underlying factor is increasing customer satisfaction. And then from a technical priority standpoint, there's a couple of key areas. The cloud services, we're seeing more and more working with the customers that we have moving to the cloud. And mobility and omni-channel are very critical, especially as we get into the millennium population where they all grew up with this type of technology. So when we look at what banks are really focused on based upon these priorities, they're starting to shift away from focusing on technology and running the infrastructure and more around what it takes to run the bank. And what are the strategies that need to be implemented to grow the bank, and how do we make sure that the underlying technology accommodates those strategies? And in doing so, how do you realize economies of scale and go to an OpEx type of model? And one of the key items is the focus on customers. In fact, I was at a recent industry event with AWS. We were hosting a dinner for about 30-plus top executives from various banks in New York City. And we went around the room and asked them, what are your key drivers? And not one of them actually mentioned about, focusing on customers. And really to stay competitive, that's really what the area needs to be, is what is the customers looking at so that you can maintain the existing customers you have and grow your customer base. So when you look at some of the digital challenges that banks are looking to evolve to, and they look at their current infrastructure, the traditional banking systems have some major challenges. Over time, a lot of these banks have done a lot of customization around their infrastructure, so it's a very tangled system. Not necessarily cost effective. A lot of legacy applications that potentially don't allow for integration to improve customer experience and also don't allow for fintech integration. And we're also finding that there's not the flexibility and quick time to market that banks need today to compete with neobanks and other evolving competitors such as Google and so forth. So when you look at the digital transformation, there's 5 factors that we see that banks are looking at of how they can potentially transform their environment. What you see on this chart are the 5 one is do nothing. And in fact, some banks are actually doing nothing. They're perfectly happy with what they have in place and where they're positioned in the marketplace. Rip and replace. Rip and replace, though, is a very risky situation, putting in a new core and migrating it immediately. Third is stand up a parallel core focused on all digital. Fourth is surround the core with fit-for-purpose type of activities. So you open up the core with some APIs and you add some fintechs to meet your specific business drivers. And third is surgically change the core in regards to looking at how do you evolve it so it's a lot more flexible. And what we're working on with a lot of our clients today is kind of a combination of 3 and 5. In fact, we've just supported a small bank in Oklahoma that's now running in the cloud. It first stood up a digital capability, and over the next couple of years, they're moving their current infrastructure to the new digital platform, and they're doing it by different asset classes and different product segments of their customer base. And when you look at the digital transformation, there's two aspects of it. What does it mean to enable a digital bank, and then what does it mean to enable a core? And the key thing, of course, and we've covered those to a certain extent in some of the drivers, is reduce your time to market, reduce the cost of change, allow digital enablement, have an open architecture so you can really accommodate and plug in new capabilities. Integration capabilities are very critical. And then last but not least, and probably the most important, is create a really compelling customer proposition. And it's all about the customers. And then from the core side, which kind of maps into the digital enablement, you need to retain the resiliency and uptime, especially with the regulatory challenges and requirements that are put on the banking community. And in doing so, need to lower the technology run costs and remove core constraints. So when you look at and kind of following through on what Paddy went on, the timeline here, a lot of cores going back were very monolithic, and a lot of banks today still have monolithic cores. It's evolving now more towards an API-enabled externalization of functions. The core still runs on some of these monolithic platforms, and there's streamlining of ledger-keeping cores with adjacent capabilities. And really the end state is to have a cloud-ready, thin ledger core composed of different capabilities. So you enable it as a service, pace-layered architecture, cloud web scale, have microservices and APIs, and the streamline where the core is really focused on, what it's primarily was originally meant for was your critical record keeping ledger for all of your bank's transactions. And, as you heard from Misha, similar to AWS, one of DXC's key differentiators is our partner ecosystem. We're very focused on partners, and we look at the banking community and the fintechs. We find that partners are vital in 4 major areas. Micro app engagement layer, looking at how do you effectively onboard clients, how do you provision different services, the artificial intelligence engine, especially around analytics and looking at customer experience, looking at risk mitigation, looking at AML. How do you use AI to really improve the processing capability and the insights that you get from the mass amounts of data that banks have to process? And then you have a microservice layer. And really, this is more around improving the journey of the customer and also your whole middle and back office processing. And then last but not least is around distributed systems of record, such as blockchain. When you look at some of the mortgage side of the business, we're aware of, and we've worked with a couple banks and blockchain providers to use the blockchain ledger in looking at how you do mortgage processing. Similar to what Misha was saying, we look at our partner ecosystem from 4 major areas: strategic partners such as AWS, and some of these partners are actually competitors. We have solution partners, channel partners, supplier reseller. We have over 250 partners globally that we leverage for solutions. It was mentioned by Paddy that we were also DXC has a relatively new offering around Celebrity Digital Banking, and what we've done is we've taken a very hyper-efficient, highly configurable, solid Hogan system that is run by about 40-plus banks around the world, 6 of the top of 10 in the U.S. We've now enabled it as a service in the cloud, working with AWS, and it enables the banks really to focus as in response to the drivers we went through on customer acquisition, any channel, any device, leveraging our partners, engage with fintechs, pay-as-you-go, and really focus on running the bank and less on running the infrastructure, and be a competitive position to deal with these neobanks and other challenger banks that are evolving. And this is just a very quick overview. You've got the core in the middle, very much opened up with APIs. Again, we leverage a lot of partners. We leverage an omni-channel capability with a API layer that interacts with a lot of banking processes. And then there are various optional fintech services. Just mentioning one like Amberoon provides AML, KYC capabilities. So these are already certified in our environment, and it can very readily integrate into banks' current capabilities or leverage one of these optional capabilities, such as a digital live agent capability or digital checking capability. And one of the key features is pre-integrated banking APIs, leveraging our partner. So it really makes for a very flexible capability, almost a plug-and-play capability when you want to add new capabilities into the environment. Some of the benefits on a cloud perspective, it does provide cost optimization, as you heard from Misha, accelerate the value. The cloud provides a lot of flexibility and agility from an IT standpoint, reduce CapEx, evolve really to an OpEx model and a pay-as-you-go model, and eliminates risk mitigation. As Misha said, a lot of people feel that the cloud is potentially more risky. In fact, there's a lot of checks and balances that have been put in place to really help mitigate the risk. And, in the banking capital market space, one of the key regulators in the capital market space is FINRA. They moved about 95% of their data to the cloud. And, when you have a regulator moving to the cloud, that is another certification that, it is prime time and ready really to support the banking and capital market community. And last but not least, from an overall perspective, we work very closely with AWS and other partners. We have the largest integrated practice with AWS around the world. And we respectively, from a differentiation standpoint, we have leverage AWS's marketplace, our partner ecosystem, to provide leading edge solutions. We've developed a joint AWS DXC infrastructure around this Celerity Digital based upon a proven hyper-efficient core capability that processes over 250 million deposits accounts, trillions of dollars worth of transactions a day, highly reliable, highly scalable, and we offer it to the industry as a pay-you-go model MSP capability. And again, really allowing the banks then to focus on running the bank and less on running the infrastructure. I'll turn it back to Adam.
I'll go ahead and take it from there, Tom. Thank you very much for that presentation. Also, thank you to Misha and Paddy for your contributions to this very fascinating conversation on banking digital transformation that we're having today. We do have quite a few number of questions that have come in from those of you who are listening to our presentation. I want to let you know there's still plenty of time to get your questions in. There's an Ask a Question button near the bottom of your screen. If you go ahead and click on that, you'll be able to ask a question to our panelists. If you want to ask a question to one of our specific panelists, please go ahead and indicate so, whether it's for Paddy, Misha, or Tom, and we'll make sure that question gets directed to them. And, of course, if you just have a general question, go ahead and send that in as well, and we'll be happy to have our panelists respond to it. One of the questions that came in, we'll go ahead and get started. Let's see. This one came in fairly early on. What do you think about the future of wholesale banking? So far, impact has been on retail banking and payments primarily. And let's see if perhaps maybe we could have Paddy or Tom refer to that question.
Paddy, you want to start?
Sure. Yeah, sure. This is Paddy. So we're seeing a lot of things happening in wholesale too. It doesn't get as much press as the consumer side of things, given the nature, the scale of the business. But if you break it down around transaction banking, we're seeing definitely innovations in payments. Also, there's some new startups that we're working with, which are doing KYC for business, or KYB, if you will, or eKYB. So a little bit on the reg tech side. trade finance and supply chain financing on the blockchain that has been going on for some time. We're seeing a lot of kind of efficiencies with that kind of model. Ripple, one of the first kind of blockchain fintechs, was kind of working in that correspondent banking space. More people have come in, including some incumbent banks that are offering that or building that kind of settlement, blockchain-based settlement for foreign exchange or for addressing the correspondent banking business. Capital markets, and Tom might have some remarks on this too, given his background on capital markets. From front to middle to back office, there's a lot of things. So Kensho, which was acquired by S&P, if you know, kind of using AI and machine learning for optimizing trading. Definitely on the clearing and settlement in the capital market side, there has been a lot of blockchain movement, including from R3 and some other players. A good example I'd like to quote also is Provenance, which is Mike Cagney's new company that is doing loan securitization on the blockchain and cutting off a lot of 100+ basis points in the process. So I think there is a lot of opportunity in the wholesale side of the fence. Tom, would you like to add something?
No, I think you've done a good job covering it, Paddy. I want to make sure there's time for additional questions.
Sure. Speaking of that, let's go ahead and take a look at our second question. This is an interesting one I'm sure is on the minds of a lot of people who are looking at this possible transformation. This one has to do with outsourcing. And the question is, do you think that outsourcing to the cloud also potentially increases risks? Talking about outsourcing a core of bank data, infrastructure, that sort of thing. Perhaps, Misha, could we send this one your way?
Yes, I'm happy to take this question. It is really... the question, I think, can be addressed in multiple, and there's a lot kind of packed into this question, and there's multiple dimensions. So I will address it through three different perspectives: from a business perspective, from an infrastructure management perspective, and from security perspective. So from the business perspective, I think the one of the main benefits public cloud provides is that it frees up businesses to focus on their core competencies, and allowing AWS to take care of the heavy lifting of the managing and provisioning infrastructure, and kind of removing this kind of whole infrastructure blocker, which most banks, and in fact all banks, all organizations to experience in the on-premise world, because it just takes such a long time to provision infrastructure, to innovate on the old infrastructure, because it takes time just to get new products in, and so on. So to stay competitive, I think it's really key for financial services and the banks to kind of think strategically about moving core workloads to public cloud, because their competitors already do, and there are many examples of that. So that's one angle, right? Just kind of remove the heavy lifting, focus on your core competency, right? And mitigate the risk of falling behind. But then, of course, there's a risk of we say risk, like how resilient is your infrastructure, right? What is the likelihood that all of a sudden my data center is no longer available? And to this concern, I would say that the cloud infrastructure, certainly AWS infrastructure, is at least as reliable, but in many cases, it's by far more reliable than traditional data centers. AWS has over 60 regions. Within region, we have typically 3 or more availability zones, which are redundant data centers. So it's the infrastructure design. So even if the region goes down or a availability zone goes down, there's always redundant services, redundant capacity, which can pick up workload, and customer essentially doesn't even notice what happened. And lastly, security, which is really on top of the mind, and that should be of every customer, and certainly on top of the mind of Amazon. It's a security job zero for us. Is that what we're seeing, and it's a testament, not just coming from our observation, but from the customer themselves, that there's a testament from chief security officers, chief information officers, that they in their research they find that the cloud infrastructure is more secure than their own on-premise infrastructure, and they actually choose cloud for that reason, because cloud is more secure. But of course, it's important to mention that we have what we call the shared responsibility model, where the cloud provider in AWS is responsible for the security of the cloud, right? So we make sure that the data centers are secure, making sure that the access is properly mitigated, there's permissioning is in place, etc. And then security of the cloud. So the customers, as they run their workloads, have to follow the best practices to ensure that there is no security breach. And there's plenty of best practice documentation available on how to achieve that. So hopefully that addresses that question in three parts. And apologies if it was a little too long.
Excellent, excellent. Thanks for taking a bit of time to address that. We do have about 10, 15 minutes left for our presentation, and we are getting a few more questions in. I do want to encourage you, if you have a question for any of our panelists or something you'd like to ask sort of the panel at large, go ahead and click that Ask a Question button and go ahead and write your question in there as clearly and as simply as you can. Again, if you want to direct it to someone in specific, feel free to do that. Or if you just have a general question, we're happy to field that question as well. I want to take one question here. It has to do with de novo banks, and generally, what do you think about the sort of phenomenon of de novo banks that are coming up in the market? Do we have anyone on the panel who'd like to take a look at that one?
Paddy, maybe you want to pick that one up since you've been working with some
sure.
of the banks.
Yeah, I think they're talking about the challenger banks. So yeah, there are several of them. I think most recent, Chime raised a round with $2+ billion in valuation. A lot of the European, I think a lot of these challenger banks came or started in Europe with Revolut, N26, and Monzo, and they're all kind of setting up businesses in the U.S. I think it's an interesting phenomenon there that the deposit share is still low compared to, say, traditional banks, but they have huge valuation. A lot of the valuation is from kind of interchange revenue, at least in the case of Chime. I think that this is here to stay. They would maybe evolve into a more kind of a lifestyle application, which also lets you do banking and payments, similar to like the WeChat model, say, in China. So that's one option. But the things that Misha and Tom talked about are around kind of enabling these things, and I think some of them are built on AWS, and Celerity Digital are good foundational backends to enable these challenger or de novo banks because they need a strong, robust infrastructure to support their growth as they scale their customers.
Yeah, and this is Tom. Just adding one additional aspect of it. We also are seeing that some large banks and other digital platforms are actually working with novo banks, and the larger banks are becoming the fiduciary behind these banks and even leveraging some of these banks' technologies so that it becomes a very cost-competitive positioning in the industry.
Excellent. We're coming up toward the top of the hour. I think we've got time for another question or two. One I thought might be a good question, which sort of covers sort of the general the themes that you've been talking about, has to do with some of the banks who might already or currently be navigating some of these core transformations like you all have been talking about. I'm wondering if there's anything from those experiences that you've seen that maybe you can share with folks in terms of how they're handling this challenge.
Yeah, this is Tom. I'll start. As I mentioned at the beginning of my section, there's about 18 or 20 different banks that we're actually working with on various transformations. So one example is a Midwest bank that's a fairly substantial, large-sized bank with millions of accounts and customers. They're in the process of transforming their bank off of mainframes, off of their data centers, and bringing it into a digital environment, digital world with cloud capabilities and so forth. And what they've done is actually, one of the ways they're mitigating some of their risks, they've actually taken their Tier 1 and Tier 2 applications, and they're using one cloud provider for that, and their tier 3 and tier 4 applications, and using another cloud provider for that. And that actually gives a nice balance, because this way they have a competing environment from a provider perspective, and they're leveraging companies such as DXC for the integration aspects and the mitigation of the risk from a migration standpoint. We have a very substantial practice that helps clients migrate off of mainframes and legacy platforms, and it's all about mitigating risk. And another key aspect of it as banks move to the digital world is, and Misha covered a lot of this, is what are the regulatory considerations. So it's very important, and what we've seen to be most effective is bringing organizations like the FFIEC into the early strategy discussions with these banks, so that the regulator is well aware of what the bank is doing and not addressing it after the fact. So this way you're addressing a lot of the risk and the security and other considerations. And that's what we've seen as some of the most effective interaction with the regulators, is actually getting the regulators involved early on in the process.
Absolutely. That's something that I know that I've heard from a number of folks, that when it comes, particularly with regard to regulation, that the sooner that they're involved, the easier it is to get the sort of questions answered, need to be answered, and to avoid making some of the mistakes that people can make, and money that can be involved. I thought, as we're coming up to the top of the hour, maybe what we might want to do here is maybe have each of you sort of recap some of the key takeaways from your presentation. There's been so much information that you've been able to share with everyone today. So perhaps it might be a good idea if each of you could maybe sum up maybe some of the key things you'd like people to sort of take with them from this presentation.
Patty, you want to start?
Do you want to go in reverse order? Yeah, or I can start, or do you want to go in? Well, maybe I'll start. I think the key is, as lot is happening in financial services, right? There's a lot of disruption, a lot of optimization. Competitive landscape is expanding. It's just not your peer banks or other banks and credit unions that you're competing with. So like when banks look at how to stay competitive and how to grow, they have to look at partners and technologies with a new lens. We talked about this neobank platform, how even if you're looking at a core transformation program or a digital transformation program or fintech partnership program, what do you do internally in terms of your technology stack and the partners you work with to achieve those goals. So customer centricity is key, kind of focusing on the customer, because I think Misha quoted someone in his presentation, the customer expectations they want to have from a bank, what they get from like a Netflix and Amazon and others in other parts of their life. So it is customer expectations are out of the roof, and so customer centricity, agility is critical. Ability to change, it's a journey, not just a one-step transformation, and ability to change to market forces is paramount. So that's what I would say are some of my key takeaways. Misha or Tom?
Yeah, thanks, Pat. I can add a few from AWS perspective. I mean, first of all, I just to reiterate the importance of raising customer expectations and being a driver. Cannot say enough about it. And fintechs are being essentially responding to this need, right? It's not just a disruption, but responding. So I think bigger banks need to listen. I think they do. The second, I think, was important one is that we're increasingly seeing more and more core workloads being moved to the cloud, and to AWS in particular, workloads containing PII, personal identifying information. And I know some customers were asking us, like, well, do you know of examples? And now there's plenty, because that's a game changer, right? So that's really a signal to the market that the core banking can and will and should move to the cloud. And lastly, I do want to emphasize the role of AWS plays in this journey of innovation. Essentially, AWS is an enabler, allowing banks and financial services companies focus on what they can do best, right? Focusing on their core competencies and leaving this heavy lifting of managing infrastructure to AWS. And as a result, the customers would see structurally lowering costs, eliminating some technical debt, simplifying infrastructure, being able to innovate faster, bringing new ideas to market faster, and being able to run highly scalable infrastructure for data analytics on demand, which is one of the major trends in the market today. And I guess at the end, on top of all this, it leads to reduction in risk because the cloud provides better tools, better data, and better security kind of management technology.
Yeah, and this is Tom. Just building off of what Paddy and Misha just indicated, because they covered a lot of the items I was going to mention. The risk, I think, is one of the major considerations. I mean, when banks are looking at evolving to a digital environment or any environment, it has to really look at what are the risk mitigations and what are the risk impacts and what is the risk to business and regulatory oversight and so forth that you need to address. So you need to go into a digital transformation with a very well thought out plan in regards to how do you implement. When we looked at some of the material I presented, standing up a new digital platform and then doing a migration over a period of time, helps mitigate that risk versus just doing a rip and replace, just as one example. So I think risk is a major consideration as banks look at focusing on evolving their capabilities to support the customer. And that's the other critical consideration, is it should be all around the customer. I read a recent study that in the U.S. alone, in the the smaller tier market, over 25 million current customers change banks annually. That was just one study. And what do banks need to do to retain these customers and then increase their customer base? They need to provide the flexibility. They need to make sure that the customer satisfaction is being met, that you have the flexibility and the capability, mentioned about payments, that a lot of millennials are using Venmo and some of these other payment systems to really quickly, do faster payments and so forth. And there's the brick and mortar. A lot of people don't even go into brick and mortar banks anymore. So it's really having that flexibility, having that risk mitigation, and really focusing on the customer experience as the drivers that we're seeing, and having partners. The partner ecosystem is critical because companies today can't really build their solution. Technology companies can't be a holistic solution to a bank. Really needs to have the partner ecosystem with the way that changing technologies are continuing evolving.
Excellent. I really appreciate that last round of wrapping up. Again, as I mentioned, a lot of different concepts and themes discussed today, and I think it was very, very helpful for each of you to give us a bit of a summary for something to take away with. Speaking of that, for those of you who are curious, the recording of this webinar will be available on the Finovate blog in the coming days, so go ahead and stay tuned to the Finovate blog, and we'll get this webinar recording up so you'll be able to review this. I know a number of you asked questions about that availability, and we want to make sure that you know that you will have the ability to access the recording again. I want to thank you for joining us. I want to thank our panelists, Paddy, Misha, and Tom, for joining us today as well. Again, thanks for joining us, and have a fantastic day.